All right, we need to talk about the Great Debasement. It's this unsettling idea that explains why the money in your bank account feels like it's an endangered species. So, what is actually happening to your cash, and where is all the smart money going? Let's get into it. You ever have that feeling? You look at your savings, you look at your paycheck, and it just feels like you're holding a melting ice cube. Like every single day, it just buys a little bit less than it did the day before. Well, you're not imagining it. That feeling is at the absolute heart of one of the biggest, quietest financial shifts happening right now. And this whole thing actually has a name. It's called the Debasement Trade, and it's really a simple, kind of scary bet. The thinking goes like this. Governments are piling up mountains of debt, and the easiest way out for them is to just create more money. This, of course, erodes the value of the money you're holding, so investors are making these huge bets that this isn't going to stop. I mean, who wants to be the last one left holding that melting ice cube, right? So, if cash is toxic, where is everybody running to? Well, they're running towards things that you can't just print out of thin air. We're talking about a flight to quality, things like stocks, pieces of actual businesses that produce things. They're going into gold, the classic store of value for thousands of years, and of course, real estate. But now there's a new kid on the block. Bitcoin, which a lot of people see as a kind of digital hard money because its supply is totally fixed. So this isn't just chaos, it's a very deliberate escape from debasement. So for our first section, let's look at how corporations are handling this, because some of them aren't just sitting on the sidelines watching. Oh no, they are actively building financial life rafts. And this brings us to a fascinating character, Michael Saylor. He's the CEO of a software company called MicroStrategy, and his approach has been, well, radical. Instead of letting cash sit in his company's treasury losing value, he's just converting pretty much all of it into Bitcoin. But his goal isn't just to make a quick buck. He's trying to build what he calls a monster company. And just listen to this quote, because it says everything about his ambition. This isn't your typical corporate mission statement about shareholder value. He's talking about providing a comfortable retirement for 1 billion people. He sees the current monetary system as failing, and he's not just trying to save his company. He's trying to build a solution for literally everyone else. And look, this isn't just some random impulse buy. He has a full-blown 4-step blueprint. First, adopt what he calls digital capital, that's Bitcoin, as the main asset on the books. Second, use that capital to build a whole new digital credit market. Third, get rid of conventional debt and create what he calls a bulletproof balance sheet. And the final step, the end game, change the entire monetary system. I mean, the ambition is just breathtaking. Okay, so that's the corporate world, but this story goes so much deeper. Now we're zooming out to the global stage, the geopolitical arena, where a new kind of Cold War is being fought, and the primary weapon, it's money itself. And it all kind of revolves around this number, $40 billion. That's how much the US government recently funneled into a deal to bail out Argentina, a country with, get this, over 200% inflation. So you have to ask, why? And where in the world did that money even come from? Well, the answer lies in this super obscure tool called the Exchange Stabilization Fund, the ESF. It's basically this secret slush fund inside the Treasury that was created way back in the 1930s. And here's the kicker. It lets the government intervene in other countries' economies without ever needing a vote from Congress. It's incredibly powerful, and it all happens in the shadows. And this is where we get two very, very different stories about what really happened with this deal. The official story, the one they tell you, is all about geopolitics. It's about fighting China's influence and protecting the US dollar. Sounds pretty noble. But there's another story, which suggests a totally different motive. Bailing out massive Wall Street funds, some with very cozy ties to the Treasury, that had made some huge, disastrous bets on Argentina's debt. So you see, this deal with Argentina, it's not just a one-off thing. It's a single battle in a much bigger financial war, a conflict between the US and China for global economic dominance, fought not with tanks and soldiers, but with currencies, bailouts, and backroom deals. This is the new battlefield. So while the nations are battling it out, there's another war raging right inside the markets themselves. And it's this violent, messy clash between the old financial system and the new world of digital money. And the core of this whole problem is actually pretty simple. You've got old finance, which runs on banker's hours, right? Monday to Friday, 9 to 5. It shuts down for weekends, for holidays. But new finance, crypto, it never, ever sleeps. It's on 24/7, 365, always online, always moving. And when you have these two systems on totally different clocks, you get these really weird side effects, like something called the CME Gap. So here's how it works. The traditional futures market, the CME, closes on Friday afternoon, but crypto keeps trading all weekend long. So if Bitcoin makes a huge move up or down over the weekend, you get this gap between Friday's closing price and Monday's opening price. And traders love to bet that the market will eventually swing back to fill that gap, which just creates a ton of predictable volatility. And the fallout from this kind of friction can be absolutely brutal. Look at this number. In a single 24-hour period, nearly $19.5 billion in leveraged trades, that's basically trades made with borrowed money, were completely liquidated, wiped out. Just to give you some context, that is more than 10 times the liquidations we saw when FTX collapsed. It's insane. So when you see these crazy market moves, it's not just random volatility. It's not just noise. What you are hearing is the sound of two massive tectonic plates, old finance and new finance, grinding against each other. And that friction, it creates financial earthquakes. And those earthquakes are wiping people out. So you have corporate strategy, you have geopolitics, you have market structure. And all of these threads, all these conflicts are now converging in one single place, the halls of power in Washington, D.C. The entire battle for the future of money has now become a political one. Suddenly, lawmakers are being forced to grapple with these enormous questions, like who even gets to regulate this stuff? What are the rules for decentralized finance? And maybe the most important one of all, do you, as an individual, have the right to hold your own keys, to actually truly own your money without a middleman? And make no mistake, the stakes here could not possibly be higher. This isn't just some niche debate for tech nerds or traders. The decisions that get made on these questions in the next few years will literally define the future of money, of privacy, and of economic freedom for the next 100 years. Which leaves us with this one final massive question. Are we just watching another crazy up and down market cycle play out? Or are all these things, the corporate life rafts, the financial Cold War, the market earthquakes, are they the birth pangs of an entirely new monetary era? That right there is the multi-trillion-dollar question. Thanks for tuning in.